are set to release their September quarter earnings next Thursday. Well, it was a mixed close for the major indices on the street, despite the strength shown from U.S.-listed Chinese stocks. For the session, the Dow dropped 0.4%, now pulled down by a huge decline from Disney. The S&P 500 managed to close marginally higher, and the Nasdaq put on 0.5%. Meanwhile, EV maker Rivian saw its market cap top $100 billion on its second day as a publicly listed firm. Its share price rose 22% a day after it completed one of the largest initial public offerings in the U.S. history. Now let's bring in Yussef Gariani. He's Director of Investments and Operations at IHT Wealth Management. He's speaking from Chicago, Illinois. Yussef, now we're still coming off those inflation concerns in the U.S. Inflation at a 30-year high, mostly due to supply chain issues. But at some point, everyone expects those supply chain issues to resolve. But what if this inflation is not as transitory as what the Fed wants it to be? Will that derail the stock market rally that we're seeing right now?
Yes and no, and I hate to waffle on you like that, but there's parts of the market that are going to be just fine, and there's parts of the market that you're not going to want to be in as much, right? But, you know, at the end of the day, inflation, we're not super concerned about it. We think most of it's transitory. If it's not, if it's sustained, if wage inflation picks up and it's here to stay for a while, you still want to be in the market. You don't want to be in bonds, and you want to be in companies that have stable cash flows, that are able to kind of return cash to their shareholders or pay dividends out. Now, that's the classic value trade, right? So maybe growth names get hit for a quarter or two, but at the end of the day, you want to stay in the market, and that's really the important thing. You have to be optimistic about this.
Right.
Stay positive.
Yeah, so inflation, though, is usually bad for the dollar, but we saw the greenback at 16-month highs, gold prices near 5-month highs. What does this tell you about the risk appetite in the market now?
The risk appetite is massive. There's a ton of liquidity out there. There's a ton of people investing. You can see it. You saw it in the Rivian IPO. Anything that says electronic vehicles, anything that says, you know, innovative or growth, people are all over it. They're looking for the next big thing. Quite frankly, for us, that's a little bit scary when we see that much enthusiasm in the market. We think that a lot of those names may be a little bit overhyped, your Teslas, your Rivians, but at the end of the day, the broader U.S. market, there's a lot of great companies doing a lot of great things. We're all looking forward to the reopening next year. You got to be in the market. You have to be willing to take chances. And there's opportunities, whether you're in the growth space or the value space. But we do think that the value space, it's going to be a little bit harder to time that trade, a little bit harder to figure out just exactly where inflation is going.
Mm-hmm. And a lot of these inflation concerns are happening because of concerns of whether the Fed will be more aggressive when it comes to policy. And you mentioned you think this inflation is transitory. Does that mean that these concerns over earlier rate hikes are overblown?
No, they're not overblown, but it's a tricky situation because there's not really anything the Fed can do, right? The Fed's got to be scared seeing these inflation prints, but raising rates is not going to, you know, make the United States start pumping more oil out of the ground. If anything, the oil companies are kind of investment constrained. All the capital right now is flowing to green investments. So they have a harder time accessing capital. Raising rates isn't going to help them pump oil out. And same thing, you know, used cars have been a big driver of inflationary pressure over the course of the year here. And, you know, used cars are going to be fixed by raising rates. Right? Like we need supply chains to unlock. We need chips to make their way into new cars. We need more vehicles to come on the market. So you've got these issues that the Fed doesn't have a lot of tools to try to fix. And so that puts them in a really tricky position. So, you know, all in all, we're still pretty optimistic.
Yes, a lot of pressure on the White House to resolve those supply chain issues. But Yussef, you mentioned some valuations in the tech space are a bit more concerning. Where are the opportunities then? So that's a great question. We're always looking for opportunities. You know, I think the valuations are a little extreme, like I said, in the electric cars. Perhaps in some of the chip names like NVIDIA, that's up there really, really high. Love the company. Valuation looks a little expensive. But all that said, we do think there's a lot of opportunities, especially in, say, things like payment companies, right? Or as you just were talking about earlier, Chinese technology names, right? JD just blew their singles day numbers out of the water.
That's the kind of business that we'd want to be a part of, that we'd want to be invested in. And then in the United States, things like Visa or PayPal or MasterCard, as the economy reopens, gets back to people traveling internationally, spending money, I think payments is a great place to be.
All right, we'll keep our eye on that. Yussef Gariani there, Director of Investments and Operations at IHT Wealth Management, joining us from Chicago. Now, a fairly disappointing but expected earnings report from Southeast Asia's largest ride-hailing and food delivery firm, Grab. It reported a 9% decline in third-quarter revenue.